Hi everyone, welcome back. I'm Coach Tasha, and in today's video, I'm going to be doing a class teaching you how to fill out Form W-4 for head of household. Now, I usually do these every year, but I usually only do it just as a whole generic form. But this year, I decided to do a breakdown of each filing status because so many of you always have lots of questions in the comments, and please make sure you do leave any comments. And while you're there, like, comment, and subscribe. So let me just go over really quick what I'm going to cover in this video. So I'm going to show you how to fill out Form W-4. All right, again, for head of household. Also, I'm going to be showing you how it impacts your tax return. You're going to see me looking at my notes, okay? And I'm also going to demonstrate how to use the IRS Withholding tool to help you fill out Form W-4 correctly, okay? Now, just before I get started with all of that, the first thing I want to mention, because not everybody even understands what Form W-4 is, and I want to tell you the purpose of it. It really can be used in a sense of like tax planning, so to speak, because it's to let your employer know how much federal taxes they should withhold or not, or whatever other adjustments you want on there, if you want them to take out a little extra, whatever the case may be, okay? But that is the purpose of the form. It is to make sure, the proper amount is being withheld, to help you bring home more or less, or just the right amount in your paycheck. Okay, and just as a reminder, Form W-4 is only for federal withholding. Okay, now I haven't really started doing state withholding forms, but I do get a lot of questions from you, a lot of you asking about what about state withholding. So, make sure you comment and let me know if you want me to do your state withholding form. There's so many states to do, and there are a few small amount of states where you don't even have withholding. So yeah, but you can comment, and if I get enough comments on a particular state, I will do that video. Okay, so now I'm going to cut to my screen, and we're gonna do a walkthrough of the form and the withholding too. Okay, so bear with me. Okay, so now you're gonna come to irs.gov, okay, up here. You're gonna come to the search bar and you're gonna hit W-4, W-4, and then you're gonna say enter. And then you're gonna come to the PDF, right? And now make sure you stay to the end, because I'm definitely going to be giving you some extra tips for accuracy and, avoiding common mistakes. So please make sure you stay to the end. All right. Now, the first thing you're going to come here. Obviously, step one is so self-explanatory. You're going to fill out all of your personal information, which is your first name and middle initial, your last name, your social, your address, and your city and state. And then, of course, in C, you're going to check head of household, because remember, that's what I'm doing this class on, head of household. So that's what you should be checking. All right. Now, next you see it says complete steps 2 through 4 only if they apply to you. So just come down here and take a look and see, well, what is step 2? Now, it's either going to be two situations where you would need to do something in step 2. Either one, you hold more than one job at a time, or 2, you're married filing jointly and your spouse also works. Now, obviously, again, since we are doing this class on head of household, this married filing jointly option does not apply. So now you need to ask yourself, are you working more than one job, or do you have additional income coming in from someplace else, like maybe a part-time business on the side or whatever the case may be? And, that to be factored in there. So if that's the case, you're going to check this box, okay? If it does not apply, you can just skip it, as they said, and go to step 3, because this is the section that applies to especially head of household people, okay? Now, first, you see it says here, so you see it says claiming dependents and other credits, all right? Now, here you see where it says multiply the number of qualifying children under age 17 by 2,000. Now, I'm going to tell you for my example, because I've already, prepared the sample person that I'm going to use. I just created some data on a fictitious person or whatever for this example. So let me just tell you, the person, for this, demonstration, I'm using someone who's making 90,000. They're 35. They have two children, one age 15, one age 13. So they're both under 17. Okay. And I'll go through some other data in a minute because that applies to the withholding tool. But I needed to let you know that for my demonstration, the two children, one is 15 and one is 13. So since they're both under age 17, we're going to put 4,000 here. Okay. Here is where you would put 4,000. Okay. Now, for our demonstration, we don't have other dependents over age 17. But what I want to tell you is that obviously for yourself, you have to fill this in based on what your circumstances are. Now, you may very well have another child that you're claiming that's over 17. So you would not put 2,000 here because that doesn't apply. You would put 500 here. Let's say they're 18 and you're still claiming them. Okay, there you're going to put 500 on this line item. All right, this 2,000 only applies to when you're claiming children under age 17. So please be mindful of that. And that's how you get your number on line 3. Okay, so that's the most important part. And I'm going to cut to the withholding tool in a minute. Now, other income. Step 4 is optional. So let's see what this other income is. If you want tax withheld for other income you expect this year that won't have withholding, you can enter the amount of other income here. All right. This may include interest, dividends, retirement income. So maybe you have bank interest coming in. Again, maybe you have that side business or something else you're doing. Whatever it is, you can put that income here. And then, or if it doesn't apply to you, you can leave it blank. Now, deductions, if you expect to claim deductions other than standard deduction and want to reduce your withholding, use the deduction worksheet on page 3 and enter the result here. Okay, so let's come down to the worksheet. Now, remember, just a friendly reminder, because it's good for you to understand terminology like standard deduction versus itemized deduction, okay? Because those are the only two options you go with. You're either claiming standard, and this is when you file tax returns. So as I mentioned earlier, this form definitely correlates to your tax return, right? Because if you're going to be claiming standard deduction, then you don't need to do anything with this line item. And honestly, there's way more people, mostly anyway, that are claiming standard, especially because so much has changed with tax laws. And it's like on a scale, the amount of people who are still able to itemize deductions, like homeowners and things like that, and people who make large contributions, it varies. But it just seems like there's more people that no longer qualify to itemize, so they go with standard. But if you are still someone who does qualify to itemize, then you would come down to the worksheet, okay, which is here, okay? And then you just have to really read, okay? Reading is fundamental. Enter an estimate of your 2024 itemized deduction from Schedule A, Form 1040, all right? Such deductions may include qualifying home mortgage interest, charitable contributions, state and local taxes. But again, you can only claim up to $10,000 and medical expenses, but medical expenses have to exceed 7.5% income. Now, honestly, guys, I'm going to be honest. This kind of stuff can be very, very confusing to the, person who's not that familiar with taxes. And honestly, that's why it really is your best bet. If you want to make sure that you're doing all this correctly, contact a professional, a tax professional, okay? Someone who can help you figure this out correctly, help you figure out your withholding correctly, and adjust throughout the year if necessary, because, a lot of times some people will feel like, well, I don't want to hire the expert, I don't want to hire the professional. But honestly, listen, you're entitled to look at it how you want, but a perspective here is that why would you rather potentially make a huge mistake that's going to cost you so much in errors when you could have just hired the professional and got it right the first time? Okay, so I want to mention that. But listen, if you can figure this all out, then go for it. But again, that's why we're going to go to the IRS tool in a minute, because that is really the better option to go instead of trying to do all this math. That's why they created it. All right. And then, so on here is where you would enter. So again, 21,900 if you're head of household, because again, we're doing this demonstration for head of household, right? So then here, if line 1 is greater than line 2, you're going to subtract line 2 from 1 and enter the amount here. Okay. And if line 2 is greater than line 1, then you're going to enter 0 on this line. All right. Now, on line item 4, enter an estimate of the student loan interest, deductible IRA contributions, and other adjustments. And, you can kind of maybe take some of these numbers from your previous year's tax return. All right, because that's really the only thing you have to go by. And if you don't have that available, then this is not really helping you too much, because you're just thinking out of numbers out of your head. Okay. Now, once you get to a number on line 5, you're going to bring that up. You're going to come back up here to step 4B and enter that here. All right. So that's what you're going to do there. Now, C for extra withholding. Some people just really want extra taxes coming out because for various reasons. Some just want to make sure that they're not going to owe anything additional, so they just rather take more out. Everyone has their own reasons for why they want to do that. But for whatever the reason is, if you want an extra $20 coming out per check, whatever it is, you put it here. Okay. And this is what's going to give them, the guidelines on what they need to do. And then you're going to make sure you sign and date it, and your employer is going to fill in their part. Now, one thing I want to mention to you, because a lot of people, and I'm going to go to the withholding tool next, but a lot of people don't really understand a couple of things. One, your employer is not your tax professional. Your employer and payroll department is not there for tax advice. So if you're asking them questions, you are asking the wrong person. Okay. They're just there for payroll purposes. Not saying they can't answer a few generic questions like, hey, if I'm, whatever. But honestly, again, you really should not be. And most of them will tell you, because, my clients come to me all the time and I'm like, no, you should have just came to me from the beginning, but they'll say, oh, well, my payroll told me they couldn't help me with this to speak to my tax professional. That is correct, because any answers they give you, they can honestly get in trouble because they are not legal and, accounting advice. So that's first of all. The other thing I want to mention to you is that do not ever let your employer tell you that you cannot update your form as you need to. Okay, whatever changes you need to make, this is your business. This is your tax plan. Okay, and they are not to tell you that you cannot update your form as you need to. All right. So I wanted to mention that. And now we're going to go to the tools. So I have another tab open. And now if you press withholding, see, I do it so often with demonstrations. So it's there. Okay, here we go. Well, it's called Tax Withholding Estimator. That's the actual terminology. Okay. So now you're going to click on here. Now, what I want to let you know is that you need your most recent pay stub when you're using this tool. Okay. If you don't have that, then you might as well, don't even come here until you have it, because you need your pay stub. And they tell you right here, right? You need your pay stub. Okay. And a copy of your most recent tax return. All right. So, and honestly, that's even kind of sketchy because we may be able to get through this without the recent tax return, but let's see how we do. All right. So click on, go to withholding calculator. Now, remember I told you for my demonstration, I have my data points all together. So here you're going to put head of household. All right. Do you or will you have a job or a pension that regularly withholds federal income taxes? And obviously that's yes, because you're a working person. Select any that apply. Okay. I plan to claim dependents on my return. That's first of all, that is correct because again, you're head of household. And just before I go a little further, I'm going to just sit here for a minute because I should have said this early on, but one thing you have to make sure of is that you actually qualify to be head of household. But you know what? I apologize for jumping around. I'm going to actually save that to the end. So again, make sure you stay to the end because I have something really important to mention about that. But yes, you check the box. I plan to claim dependents on my tax return. If any of these apply to you, then you check those boxes. But in our example, these do not. So you're going to hit next. Okay, now, how many jobs will you have this year in which federal income tax withheld? Now, for our purposes, this person only has one job. Your first income source, we're going to say it's a salary, okay? But obviously, if any of this applies to you, if you're an hourly person, you would bubble in hourly, okay? And so that's what you're doing. All right. And now, but for this purpose, we're going to say salary. Select what best describes when you earn your income, which in this example, it's all year. Okay. How frequently are you paid? Now, for this example, I chose every 2 weeks. Okay. Bi-weekly. But if you are twice a month, make sure you check it. If you're weekly, make sure you bubble that in. You have to answer the questions correctly if you want to get the best result for you. Okay. Now, when did your most recent pay period end? I'm going to say, I think I was doing this the other day because I know I was going to make this video. And I think I said the pay period ended here. Okay. And what was your most recent pay date? And I put here. Okay. Yeah, the 18th. All right. Now, enter your wages or salary per pay period. And for this example, where is my example? I think it was, okay, I have to do some math really quick. So just bear with me. I can't believe I lost that part. Okay, let me see. Is it here? Please tell me. See, oh, yes, I found it. I apologize. Sorry for the delay. Okay, 37.50. Enter wages or salary to date. Okay, and don't mind these popping up. All right, enter wages or salary for year to date. And again, that's why you need that pay stub. Okay, so here the year to date salary on this example was $48,758. Okay, based on the information, and as you see, right, based on the information provided, it looks like your total income for the job this year will be $90,000, right, and $8. So as you see, that's about what I said. This example I was doing anyway. So the answer is yes. So this is a good measure because obviously, you know, if this number is off, then something you did wrong or whatever. Okay, enter federal taxes paid per pay period. So for this example, oh yeah, and is it still there? No, it's 474. It was 474.81. And federal taxes paid to date, year to date, was 6,172. Now, again, I did these payroll calculations just for the purpose of this example. Again, you have to look at your pay stub and see, you know, how much federal taxes come out per pay period, because again, this is a salaried person. Now, obviously, if it's an hourly person, these amounts are not going to be consistent, but there'll be different questions that are asked. Okay. So again, just as you're going through this, you have to answer the questions appropriately with what applies to you so that you can get the best answer. Now, select any for this job. Now, I'm not going to select any of these, but if you do contribute to a 401k, which hopefully you are, because, that's also a tax planning strategy where you can get taxed on less, but I don't want to go too far off of that. That's for another video. You do not include any contributions you're making to Roth 401ks, okay? Here, if you contribute to an HSA or an FSA, if you're going to be getting a bonus, if any of these things apply, make sure you check it. But in this example, I'm checking none of the above, okay? Are there other sources of income? For this example, I'm saying no, all right? Again, if any of those apply to you, you say yes, and then you answer the questions appropriately. Okay, withholding from other sources of income, estimated tax payments. For this example, I did not have the person make any estimated tax payments or anything like that. And speaking of, even self-employed people can use this tool, honestly, because I don't know if you remember seeing in the beginning, I don't really want to go back, but when it asked where was the income coming from, and it said, do you work all year, or do you do this, or do you do that? There was an option that said none of the above. So if you're a self-employed person, you would have selected that, okay? And even here now, when you would come here, you would put in any estimated tax payments that you've already made for the year. Okay, and if you like to, self-employed people, if you'd like for me to do a video just for self-employed people, please make sure you comment and let me know. All right, so you're going to hit next. Now, adjustments to income. Now, if any of these apply to you, if you're making student loan payments, if you're an educator, you're allowed a certain amount per year. Usually it's $250. If any of these apply to you, make sure you check the box. But in our example, I did not check anything, so there are no adjustments. So we're going to just hit next. All right. Now here, as you remember, when I talked to you when we were on the form, and I said the only two options are either standard or itemized. Now for this example, this person is going to be going with standard. They are not qualified to itemize. So would you like to see if itemizing your deductions would be to your advantage? I'm going to say no, just take the standard deduction, hit next. And this is why I had mentioned the age of the person was 35, because I remembered with the tool, it asked you, because there's different things that apply to different people who are of certain ages. So, again, I don't want to go too far off. I just want to stick to the focus of this class, which is the W-4 form. But, your age will have a different impact on certain things. So that's why they needed to know. Now, let's see here. Enter the age the child would be on December 31st, 2024. Remember, I said 15 and 13. So first I'm going to say 15. The second child is going to be 13. All right. Child independent care credit is not any, because you can only claim child independent care credit for children under age either 12 or under. Okay, now if you have children who you are claiming in that age bracket, all right, then you make sure you would put it here. Let's say maybe your two children were 7 and 11. Okay, 7, one is 7 years old, one is 11 years old. Then you would put, 2 here. Okay, you put their ages in the box, and then you'd hit 2, because there's 2 that you're going to be claiming for a child independent care credit. Okay, because they have to be under that age. But for this example, a 13-year-old does not qualify for child independent care credit, so we will not be doing that. Okay, enter the amount of qualifying work-related childcare expenses. Again, that doesn't apply here for my example, but if you are paying childcare, you would enter those expenses here. All right. Now, anybody who's also claiming earned income credit, enter the number of qualifying children for earned income tax credit. Now, for this purpose, Remember, I said this person is at a $90,000 salary, so they're not going to qualify for earned income tax credit. Earned income tax credit has maximum income limits. That's why it's called income tax credit, earned income tax credit. A lot of people get this confused sometimes. They are not earning money that's earned income, and the type of income that they get is not earned, and then they wonder, like, you will literally have some people who received unemployment all year, and then they ask, well, why didn't I get earned income credit? Because unemployment is not earned income. Okay. Now, but again, if your situation, if you are someone who qualifies for earned income tax credit, then you would put the number of qualifying children here, which you can only put up to 3. All right. Now, if you adopted any children or anything like that, you would enter the amount of the adoption tax credit, which you expect to be eligible for. And again, if you're not sure of these things, this is again, once more, why you should speak to a tax professional. Now, obviously, this is a lot more questions here. It goes into way more depth. I'm not going to be going through each one of those because I really, this is just pretty, generic. I just didn't want to dive too deep into all of these things, but anytime, if any of these apply to you, you make sure you do click into the arrow and answer the questions. Okay. Now we're going to hit next. And here we go. Okay, here we go. So as you see, they're saying your projected refund is potentially $7,039 because based on the way I answered the questions with all the payroll questions from the pay stub that, I did for this example, the calculator estimated that by the end of the year, this is how much is going to be withheld. And based on my tax obligation, okay, or the person's example, they're going to be potentially do a refund. Now, that just gives you like an estimate. But here below, this is what you want to do because this is what's going to show you how to implement what you need to do for each section. So as you see here, it's demonstrating for you what I demonstrated in the beginning, where you're going to fill in your personal information and check head of household. Okay. And remember that we spoke about multiple jobs. All right. And now here is where you're going to say, all right, claim dependent. So you see it's telling you enter 8,289 on step 3 for claiming dependent. So that's what you would put here. Okay. In terms of, because, so you're going to go off of what they're telling you to do, and then you put that amount here. All right. And that's what's pretty much going to help you. And then you sign and date. And that's pretty much is what's going to help you take home the right amount on your paychecks, as well as in terms of your refund. So one thing I want to say is that, this is just a guideline. Like if you're if you're not really sure about that and you don't really feel comfortable, you don't have to put the amount there. Basically what I do want to also be clear is that how this works is that the more they're withholding, then you're going to be taking home less, and you more than likely will be due a higher refund, which is what happened in the example, right? But the flip side is the less that they withhold, you are going to be bringing home more, but you might wind up just breaking even, or, hopefully you won't owe if they didn't take enough. All right. But I would say this is pretty safe based on the answers we did. So you would put that there, you would sign it, and then, that's how that would work. Okay. So hopefully this is clear. Hopefully hopefully you understand everything I explained. And now I'm going to come off of this screen and I'm going to give you those additional tips for accuracy. Okay. Before I continue with the tips for accuracy and everything like that, I do want to mention that if you're someone who receives money under a 1099 NEC, which is an independent contractor form, make sure you pick up my book. You can find it on Amazon. It's like $8.99. But it's really going to teach you everything you need to know about, your finances for being a 1099 person, because there's so much that a lot of you don't even know what you need to know. So you really need this book, and it's a quick read, nothing too crazy. So make sure you check that out. And I'll leave the link in my description box. Now, you're going to, again, see me looking at my notes. So here's a couple of tips for accuracy. First, you always want to make sure that you're using the most recent W-4 form. Okay, they do change every year. Not necessarily always change, but you just always want to make sure you have the most recent form. And sometimes they do change, because over the past few years, there was a big change that had taken place. And a lot of people were still, because they hadn't updated their W-4, the employer was going off of old information in terms of withholding and things like that. So, it's totally fine to really update these things every year. Also, make sure you're double checking your info to make sure that what you're reporting on your W-4 is what's going to be reported on the tax return, okay? Also, you want to make sure you're selecting, again, the correct filing status, because throughout the year, you can have certain life events that take place. For example, there were a couple of my clients this year that their child had been graduating from college and had a job and everything like that. The parents didn't realize that they shouldn't have no longer been claiming them on there, for that line item. They shouldn't have been claiming them anymore. So they left them on there and then wound up owing because not enough taxes came out. They were no longer going to be able to claim them. Again, you have to make sure that you qualify for a head of household status. And another thing I want to mention is that head of household status is not like the household. IRS, when they're talking about head of household, they're talking about you as the person. The filing status is attached to the person, not the household. Here's a good example for me to give you. Let's say, for example, you're the parent, you have an adult child and who stays in your house, and they also have a child, okay? That you're not the head of household because they stay there. Well, let me say this. If you have an adult child, but then you also have another child who is under like 18 that you're claiming, right? That's a better example. You have someone under 18 that you're claiming, and your other child, maybe they're a young adult and they also have a child. Well, you are the head of household for your younger child, but that other child who has their child, which is your grandchild, they can also be head of household because it is attached to them. They're providing support for their child, and they file taxes and claim their child. They are the head of household for themselves for that child. I hope I'm explaining that in a way you can understand, but a lot of people misunderstand that. It is not attached to the house, it's attached to the person. Okay, now the other thing I want to say is, I mentioned accuracy on dependency claims. Make sure they're a qualifying dependent. Also, make sure you're adjusting for multiple jobs, as I mentioned. And consider, additional withholding if you do have other income sources that you have coming in, or if you think for some reason you might owe additional taxes, then just have some extra money coming out, okay? Some common mistakes you want to avoid are not updating the form after life changes, as I just mentioned with the example that I gave you. Not updating the form when different life changes happen. Okay, even when you start a second job, or if you got married and you forgot to take it off of head of household, just different things. Make sure you're adjusting it as needed. And also misreporting dependents, again, who you can no longer claim, and not considering additional income that you may have coming in, taxable income, all right? And also another common mistake is failing to review and adjust as necessary, okay? Now, before we go, make sure you like, comment, and subscribe. I do apologize that I may have been a bit all over the place, but I try to keep it as concise as possible. And are you on my newsletter? Because if you're not, make sure you join, stay informed. I'll put the link in my description box. And I do thank you for watching, and see you next time.